The world is changing at a pace we have never seen before. Inflation alone makes it difficult to deal with all of the other seemingly catastrophic changes. There is a deep and growing sense of uncertainty that hangs over everything. It's not just a feeling, it's a reality driven by a convergence of actions by the greedy, selfish, and powerful oligarchs, including the United States president, dismantling our already feeble social safety net. We are witnessing a massive technological revolution, a political revolution, and a monetary revolution all happening at the same time. This convergence is disrupting the old systems that have governed our world for the last century. People are worried because the promises of the past, work hard, save your money, and you'll have a comfortable retirement, no longer seem guaranteed. The rules of the game are being rewritten right before our eyes, and most people haven't been given the new rulebook. This anxiety isn't irrational. It's a logical response to observing the world around you. We see governments printing money with no end in sight, leading to the steady erosion of our purchasing power through inflation. We see political divisions growing deeper, creating instability and questioning the very foundations of our societies. We see technology, like artificial intelligence, advancing so rapidly that it threatens to upend entire industries and job markets overnight. This isn't just a bump in the road. It's a fundamental shift, a great unraveling of the old order. The institutions we were taught to trust are showing cracks, and the financial advice that worked for our parents and grandparents is becoming dangerously obsolete. The core of this widespread unease comes down to a loss of control. When the value of your savings is being silently stolen by inflation, you feel powerless. When political decisions made by a few can drastically alter your future without your consent, you feel disenfranchised. When technological progress feels more like a threat than an opportunity, you feel left behind. This is the central conflict of our time, the individual versus the centralized systems that seek to manage every aspect of our lives. The feeling of worry is your mind telling you that the path you are on, the one laid out by the establishment, may not lead to the security and prosperity you desire. It's a wake-up call to take back control. Understanding this context is the first and most crucial step toward navigating these uncertain times. You cannot solve a problem you don't understand. The problem isn't that you aren't working hard enough or saving enough. The problem is that the system itself is changing. The financial world is built on a foundation of trust, and that trust is eroding. The solution, therefore, is not to simply play the old game better, but to start playing a different game altogether. A game where you are in control, where your wealth is resilient, and where your future is secured by your own actions, not by the promises of failing institutions. This requires a new way of thinking and a new strategy for building and protecting your wealth. For decades, financial advisors have preached the gospel of the 60-40 portfolio. The formula was simple. Put 60% of your money in stocks for growth and 40% in bonds for safety. The theory was that when stocks went down, bonds would go up, providing a stable cushion for your investments. This strategy worked reasonably well during a specific period of history, a long multi-decade cycle of declining interest rates and relatively stable economic growth. It was the set it and forget it model for the masses, promoted by every major financial institution. It was easy, it was simple, and for a long time it seemed to work. But that era is over. The fundamental problem with the 60-40 portfolio today is that the relationship between stocks and bonds has broken down. The very reason bonds were included, to act as a hedge against stock market downturns, is no longer reliable. We are now in a world of massive government debt and rising inflation. To fight this inflation, central banks must raise interest rates. When interest rates rise, the value of existing bonds with lower rates goes down. At the same time, higher interest rates make it more expensive for companies to borrow money, which can hurt corporate profits and send stock prices falling. So now both stocks and bonds can fall at the same time, completely destroying the portfolio's purpose. Think of the 60-40 portfolio as a two-legged stool. For a long time, the legs were strong enough to hold you up. But now, both legs are being eaten away by the same termites, inflation, and rising interest rates. Relying on this outdated model is like navigating a hurricane with a weather map from the 1980s. The financial landscape has fundamentally changed. The very assets that were supposed to provide safety are now sources of risk. Bonds, once considered the bedrock of a conservative portfolio, have become a guaranteed way to lose purchasing power when inflation is running higher than their yield. You are essentially paying the government for the privilege of losing money. This isn't just a temporary disruption, it's the end of a long-term debt cycle. The system that made the 60/40 portfolio successful was built on an ever-increasing mountain of debt. That mountain has now become so large that it is unstable. The old rules no longer apply. Continuing to follow this advice is an act of blind faith in a system that is visibly failing. To protect yourself and your family, you need to look beyond the conventional wisdom peddled by Wall Street. You need a portfolio that is designed for the world we live in today, not the world of yesterday. It's time to build a more robust, resilient, and decentralized financial foundation. If the old ship of the 60/40 portfolio is sinking, you need to build a new one, a modern ark designed to weather the coming storm. This ark must be constructed from a diverse set of assets that do not all rely on the same fragile system. It must be resilient, decentralized, and give you, the individual, more control. The portfolio for these uncertain times is not just about financial assets. It's about a holistic approach to wealth preservation and self-reliance. It is a strategic allocation across 5 key areas: Bitcoin, real estate, precious metals, carefully selected stocks, and practical, tangible assets. This isn't just an investment strategy, it's a freedom strategy. The core principle of this modern arc is decentralization. The 60/40 portfolio is entirely centralized, relying on Wall Street brokers, publicly traded companies, and government bonds. Our new portfolio spreads its risk across different systems. Bitcoin is a decentralized digital asset, operating outside the control of any bank or government. Real estate and land are tangible, physical assets that you can own directly. Precious metals like gold and silver have served as decentralized money for thousands of years. Even the stocks we select should be chosen for their resilience and ability to thrive in a chaotic environment. The goal is to not have all your eggs in one systemic basket. This approach requires a shift in mindset from being a passive investor to an active architect of your own security. It's not about handing your money over to a financial advisor who will plug it into a generic formula. It's about understanding the unique properties of each asset class and how they work together to create a fortress of wealth. Bitcoin offers unparalleled digital scarcity and portability. Real estate provides shelter and a connection to the physical world. Gold and silver are timeless stores of value that protect against currency debasement. Stocks offer a claim on productive businesses, and practical assets provide real-world utility when you might need it most. This balanced portfolio is designed to protect you from the biggest risks of our time: inflation, systemic financial collapse, and political instability. While a traditional advisor might tell you this is too complicated or unconventional, the reality is that the conventional path has become the riskiest of all. Building your modern arc is about taking proactive steps to secure your future in a world where the old guarantees are gone. It's about owning real things, both digital and physical, that cannot be easily inflated away, confiscated, or devalued by the whims of central planners. This is how you build a foundation for true and lasting financial sovereignty. The first and perhaps most revolutionary component of our modern arc is Bitcoin. To understand Bitcoin, you must first understand the problem it solves, the problem of money. For thousands of years, societies used things like gold as money because it had properties that made it trustworthy. It was scarce, durable, divisible, and hard to counterfeit. However, the money we use today, dollars, euros, yen, has none of these properties. It is controlled by central banks and governments, who can create as much of it as they want, whenever they want. This power to print money is a hidden tax on your savings called inflation, and Bitcoin was created as a direct solution to this problem. Bitcoin is often called digital gold, and for good reason. It is the first and only asset in human history that has absolute verifiable scarcity. There will only ever be 21 million Bitcoin. No one can change that rule. Not a government, not a bank, not even its creator. This makes it the hardest money ever invented. While central banks are printing trillions of dollars, diluting the value of your savings, Bitcoin remains untouched, its supply fixed and predictable. It operates on a decentralized network, meaning it is not controlled by any single entity. This gives it censorship resistance. Your Bitcoin cannot be frozen or seized by a bank or government in the way a bank account can. For an investor looking to protect their wealth in uncertain times, Bitcoin represents a powerful tool. It is a risk-on asset that behaves like a technology stock, but also a risk-off asset that acts as a hedge against monetary debasement, much like gold. Its value comes from its network, its security, and its unchangeable monetary policy. Storing your wealth in Bitcoin is like moving your savings from a currency that is constantly melting to one that is forged in digital steel. It is a vote for a transparent, rules-based monetary system over an opaque, discretionary one. It is an escape hatch from the failing fiat currency system. Getting started with Bitcoin is simpler than you might think. You can buy small fractions of a coin on reputable exchanges. The most important step, however, is learning how to take self-custody of your assets. This means moving your Bitcoin off the exchange and into a personal hardware wallet, a small, secure device that you control. This is the ultimate expression of financial sovereignty. By holding your own keys, you truly own your Bitcoin, and no one can take it from you. In a world of increasing financial surveillance and control, this property is not just valuable, it is priceless. Bitcoin is not just an investment, it is a declaration of independence. The second pillar of our modern arc is real estate, specifically owning your own home and, if possible, a piece of productive land. In an increasingly digital and uncertain world, there is profound security in owning a piece of the physical world. Real estate is a tangible asset. You can see it, touch it, and live in it. It provides the fundamental human need for shelter, making it an asset with intrinsic utility that goes far beyond its financial value. Unlike stocks or bonds, which are abstract claims on value, a home is a real, physical fortress that can protect you and your family from the storms of the outside world. Owning your home, ideally without a mortgage, is one of the most powerful steps you can take toward financial freedom. A paid-for home removes your single largest monthly expense, freeing up an enormous amount of cash flow and making you far more resilient to economic shocks like a job loss. It also acts as a powerful hedge against inflation. As the value of currency declines, the nominal price of real assets like property tends to rise. Furthermore, the cost of your fixed-rate mortgage payments becomes easier to manage as wages and prices rise around you. In a world of currency debasement, locking in your housing costs is a powerful defensive move. Beyond your primary residence, owning a piece of land offers an even deeper level of security and sovereignty. Land is the original source of all wealth. It can be used to grow food, raise animals, harvest timber, or collect water. In a crisis scenario where supply chains break down, having access to productive land could be the difference between thriving and merely surviving. It provides a level of self-sufficiency that no financial asset can replicate. The ability to produce your own food, even a small portion of it, reduces your dependence on a fragile and complex global food system. This is about building resilience from the ground up. The strategy here is to secure your base of operations. Start by focusing on paying off the mortgage on your primary home as quickly as possible. This is your castle. Once that is secure, consider acquiring a small parcel of land, perhaps a rural retreat or a homestead property. This doesn't have to be a massive ranch. Even a few acres can provide a significant degree of self-reliance. This combination of a secure home and productive land creates a powerful foundation of tangible wealth. It anchors you in the real world and provides a level of security that honestly just can't be found in any digital spreadsheet or brokerage statement. The third component of our resilient portfolio is precious metals, gold and silver. For over 5,000 years, these metals have been recognized as money and a store of value across virtually every civilization on Earth. Their value isn't derived from a government decree or a corporate balance sheet. Instead, it comes from their unique physical properties. They're rare, durable, easily divisible, and have a beauty that's captivated humanity for millennia. In a world where trust in institutions is declining, gold and silver represent a form of wealth that's timeless, universal, and requires no counterparty trust. They are honestly the ultimate insurance policy against systemic failure. Gold is the ultimate monetary asset for wealth preservation. It's the asset that central banks themselves hold in their vaults. When currencies are debased and financial systems become unstable, gold really shines. It's a hedge against inflation, currency crisis, and even geopolitical chaos. Owning physical gold is like having a savings account that exists outside the banking system. It can't be printed into oblivion, and when you hold it in your physical possession, it can't be frozen or confiscated with the click of a button. Gold is a non-digital, anonymous store of value that provides a crucial counterbalance to the digital assets in your portfolio. Silver, often called poor man's gold, plays a slightly different but equally important role. While it is also a monetary metal, it has significant industrial demand. It's a critical component in everything from solar panels and electric vehicles to electronics and medical devices. This dual nature gives it a unique profile. Silver can act as a store of value like gold, but its price can also be driven by industrial growth. Plus, because of its lower price per ounce, silver is more practical for smaller, everyday transactions in a potential barter scenario. Owning both gold for wealth preservation and silver for transactional potential provides a layered defense. The key to owning precious metals is to hold them physically. There's a saying, if you don't hold it, you don't own it. Paper contracts for gold, like ETFs or futures, reintroduce counterparty risk, the very thing you're trying to avoid. So you should buy physical coins or bars from a reputable dealer and store them securely yourself. This could be in a high-quality home safe or a private non-bank vault. Taking physical delivery is a powerful step toward true ownership and sovereignty. In a world of abstract financial promises, the tangible weight of a gold coin in your hand is, honestly, a profound source of security and peace of mind. Even in an unconventional portfolio, there's still a place for stocks. However, our approach must be highly selective and strategic. We're not just buying the broad market index like the S&P 500, which is filled with overvalued and vulnerable companies. Instead, we're looking for specific types of businesses that are positioned to thrive during periods of inflation, disruption, and decentralization. Our goal isn't just growth, but resilient growth. We want to own a piece of the productive capacity of the economy, but we have to choose our positions wisely, focusing on companies that produce real things people need, no matter what. The first category of stocks to consider are those in the commodity and energy sectors. In an inflationary environment, the price of raw materials, oil, natural gas, copper, uranium, and agricultural products tends to rise. The companies that find, extract, and process these resources are direct beneficiaries. Owning shares in these companies is like owning a claim on the foundational building blocks of the economy. As the cost of everything goes up, their revenues and profits are likely to increase as well. These are the businesses that provide the tangible goods that power and feed the world, making them essential and resilient holdings. The second category is companies that produce essential consumer staples. These are the businesses that sell things people need to buy regardless of the economic climate: food, beverages, household cleaning supplies, and personal care products. Think of the brands you see in every grocery store. These companies have pricing power, meaning they can pass on their rising costs to consumers, thus protecting their profit margins from inflation. While not as exciting as high-flying tech stocks, their stability and predictable demand make them a crucial defensive component of a stock portfolio designed for uncertain times. They provide a steady anchor amidst market volatility. Finally, we should look for best-in-class companies that are dominant in their respective fields and have strong balance sheets with little debt. These are the market leaders, the apex predators of the business world. They have the resources, brand recognition, and operational efficiency to weather economic downturns and come out even stronger on the other side. They can acquire weaker competitors, gain market share, and continue to innovate. Owning these types of businesses provides exposure to the upside of human ingenuity and capitalism, while minimizing the risk associated with weaker, more fragile companies. This strategic approach to stock ownership is about owning the winners in a world of turmoil. The final and maybe the most important component of a truly resilient portfolio is not something you can buy on an exchange. It's you. Your skills, your knowledge, and your community, your human capital, are the ultimate assets. In a world where systems can fail and financial assets can be volatile, your ability to adapt, produce, and solve problems is the one thing that can never be taken from you. Investing in yourself is, honestly, the highest return investment you can possibly make. This goes beyond financial literacy and into the realm of practical, real-world self-reliance. It's about becoming less dependent on fragile, complex systems for your basic needs. A great place to start is by learning basic life-sustaining skills. Can you grow your own food? Learning to garden, even on a small scale in pots on a patio, is a powerful step toward food security. Can you source your own protein? Learning how to fish or hunt connects you directly to your food source and builds invaluable skills. How about basic repair and maintenance? Knowing how to fix a leaky pipe, repair a small engine, or perform basic first aid can save you money and make you vastly more resilient in an emergency. You can learn many of these skills for free by watching prepper or homesteading channels online. These communities offer a wealth of practical knowledge for becoming more capable. Beyond individual skills, building a strong local community is a critical form of wealth. In a crisis, your network of trusted neighbors, friends, and family will be your most valuable support system. These are the people you can rely on for help, trade with, and share resources with. Get to know your neighbors, participate in local groups, build relationships based on mutual trust and reciprocity. A strong community acts as a social safety net that's far more reliable than any government program. It's a decentralized network of human connection that provides security, support, and a sense of belonging in a world that can often feel isolating. This focus on human capital stands in stark contrast to the advice from big financial firms. They'll sell you complex financial products and tell you to remain a passive consumer, dependent on their expertise and the systems they represent. They have no incentive to tell you to become more self-reliant because a self-reliant person is a less profitable customer. Our approach recognizes that true wealth is not just about the numbers in your account, it's about your capacity to thrive under any circumstance. By investing in your skills and your community, you're building a form of wealth that is anti-fragile. It actually gets stronger in the face of disorder and chaos. The world is at a major turning point, and honestly, the financial advice of the past is no longer sufficient to navigate the future. The comfortable certainty of the 60/40 portfolio has given way to an era of inflation, instability, and systemic risk. To simply hope for the best while clinging to these outdated models is not a strategy. It's a gamble against overwhelming odds. The feeling of anxiety that so many people are experiencing is a rational response to this new reality. It's a signal that it's time to abandon the sinking ship of conventional finance and build a modern ark, a fortress of freedom designed for the 21st century. This new plan is built on the principles of decentralization, tangible ownership, and self-reliance. It diversifies not just across asset classes, but across systems. It combines the cutting-edge digital scarcity of Bitcoin with the timeless security of physical gold and silver. It balances these non-sovereign assets with the tangible utility of a paid-for home and productive land. It strategically includes ownership in the most resilient and essential businesses that power our world. This multi-layered approach creates a robust portfolio that is not dependent on the health of any single government, currency, or financial institution for its survival. This strategy fundamentally differs from the advice of large financial firms, which are designed to keep you dependent on their systems. They sell you paper assets and abstract promises, all held within a centralized framework that they control. Our plan is about taking back control. It's about owning real, tangible assets that you can hold in your hand or stand upon. It's about empowering yourself with skills and knowledge, transforming you from a passive consumer into a capable and sovereign individual. The goal is not merely to accumulate wealth, but to build a foundation of genuine security and peace of mind. Ultimately, this unconventional portfolio is about more than just money. It's about reducing fear and building confidence in an uncertain world. By taking these proactive steps, securing your digital wealth, your physical shelter, your timeless money, your productive assets, and your own skills, you move from a position of anxiety to a position of strength. You build a fortress around yourself and your family that can withstand the political, technological, and monetary storms on the horizon. This is how you declare your independence from a fragile system and architect a future where you are not just a survivor, but a sovereign individual, ready and prepared for whatever comes next.